Have you ever wondered how the rich manage to keep their wealth? Their knowledge of and proficiency with many types of income holds the key to the solution. Today, we'll discuss the 7 different sources of income that the typical billionaire possesses, which are essential to accumulating wealth and achieving financial independence. As we all know, creating wealth and maintaining financial security depends on having numerous sources of income. And in this video, we'll examine the 7 types of income that billionaires most frequently employ to increase their wealth. Each sort of income, from active income to capital gains income, has a specific function and is essential for accumulating and preserving wealth. This video is for you if you're just getting started with your financial path or want to diversify your sources of income. We'll discuss in this video the 7 types of income that the average millionaire has, which are as follows. 1. Active income. 2. Portfolio income. 3. Passive income. 4. Residual income. 5. Royalty income. 6. Business income, and 7. Capital gains income. So take a seat back, unwind, and join us as we explore the 7 different sources of income that the typical millionaire generates and how you can include them in your financial strategy. Let's get going.
Welcome to The Strategist.
7 types of income of an average millionaire. Number 1. Active income. The easiest to understand form of money is that which you derive through a job or business that demands your active participation. The typical form of income that most people are accustomed to is active income. It is acquired by bartering your time for cash. In other words, you receive payment for the work you complete. Active income for those with regular 9-to-5 employment is made up of a salary, hourly rate, or commission. Working for someone else or for business results in active income, which normally ends when the work is finished. Active income for self-employed people can come from a wide range of sources. Active income includes things like contract work, consulting, coaching, and running a small business. The important thing in this situation is that the person actively participates in the work being done and receives direct compensation for it. Active income is often constrained by the number of hours you can work, but it can be a terrific way to start accumulating wealth. Most people need to explore alternative sources of income in addition to their active income if they want to accumulate large wealth. Number 2. Portfolio income. Income from investments including stocks, bonds, mutual funds, and real estate is referred to as portfolio income. Because it originates from a number of sources inside a person's investment portfolio, it is known as portfolio income. The ability to generate a consistent flow of passive income is one of the main advantages of portfolio income. As an illustration, when you hold a stock that provides dividends, you automatically receive regular payments. The rent payments you receive, if you own rental properties, are similarly regarded as portfolio income. The ability to be more predictable than active income is another benefit of portfolio income. If you own a bond, you are certain of the annual interest payment amount. Additionally, if you hold a stock that provides dividends, you should anticipate getting those payments every 3 months. Market circumstances and changes have an impact on portfolio income. But with the right management and diversification, a portfolio can eventually become a sizable source of passive income. As a wonderful method to augment active income or add to financial stability, portfolio income can offer a consistent stream of passive income. Number 3. Passive income. Earning money while not actively participating in day-to-day operations is referred to as passive income. To put it another way, it is money you earn when you are not working. Many people who want to accumulate wealth and achieve financial freedom frequently view this kind of income as their ultimate objective. One of the main advantages of passive income is that it can offer a consistent income without necessitating ongoing work. Rent payments are regarded as passive income if you own a rental property and a property management firm manages the day-to-day operations. The dividends you receive, if you own stocks that pay dividends, are also regarded as passive income. The ability to pursue one's passions and interests without having to worry about one's financial security is a benefit of passive income. You may be able to retire early, launch a new business, or take an extended trip if you have a sizable passive income source. Typically, passive income necessitates a sizable initial time and financial investment. Years of planning and work can go into developing a profitable rental property portfolio or a passive income stream through investments. Many people find passive income attractive because it offers a consistent source of money without requiring continual work and can lead to financial freedom. Number 4. Residual income. After the main task has been finished, income is still earned on a recurring basis and is known as residual income. Because it offers a consistent source of revenue even after the first effort has been done, this form of income is frequently regarded as the holy grail of income streams. The fact that residual income offers a passive source of revenue that can continue to produce cash long after the primary job has been finished is one of its main advantages. You are making residual income if you write a book and then continue to receive royalties for each copy sold. Additionally, you can get residual income by developing a product that brings in recurrent revenue, such as software that requires a monthly membership charge. With little effort, residual income can be a significant source of revenue. If you write books, the money you make from royalties might be significant and keep increasing over time. It takes time and work to develop a residual income stream, and frequently a sizable initial commitment is necessary. But once established, residual income can offer a sizable passive income source that can increase over time. Many people find residual income intriguing since it may be a major source of passive income with only minimal work and offers a continued stream of revenue even after the original effort has been made. Number 5. Royalty income. The money you make from the use of your original creative works, such as songs, books, software, or patents, is known as royalty revenue. Because it offers a consistent source of revenue from the usage of your creative works, this type of income is frequently referred to as a form of residual income. One of the main advantages of royalties is that they offer a passive income source that can keep producing money long after the initial labor has been finished. Another big source of money that requires little work is royalties. After you've invested time and energy into developing a product or piece of software, royalties can be a substantial source of passive income that can increase over time and is frequently seen as a type of residual income. Number 6. Business income. The money you make while owning and running a business is referred to as business income. Profits, salaries, or other types of compensation are all examples of business income. A sizable source of revenue that has the potential to increase over time is business income. If you run a profitable restaurant, your revenue from operations can rise along with business expansion or sales growth. Business revenue might provide you with a great deal of control over your future financial situation. When you run your own business, you have the power to make choices that will affect your earnings and capacity to succeed financially. A successful business requires a tremendous investment of time, energy, and money to launch and maintain. Business income can be a significant source of income and financial security for anyone who is ready to put in the time and effort needed. Number 7. Capital gains income. The profit you get through the sale of an asset, such as a stock or piece of real estate, is referred to as capital gains income. This kind of revenue is a result of an asset's rising value over time. Your wealth may increase over time with the help of capital gains income. You would make a capital gain of $50 if you bought a stock for $100 and sold it for $150, for instance, increasing your overall worth. Ordinary income, such as that earned through a job or a business, is taxed at a higher rate than capital gains income. For people who produce a sizable amount of capital gains income, this reduced tax rate can translate into significant savings. It is complicated to tax capital gains income because it depends on the kind of asset and how long it was kept. For a complete understanding of the tax ramifications of capital gains income, it is advised that you speak with a financial advisor or tax expert. A strategy to gradually increase your wealth is through capital gains income, which may be taxed at a lower rate than regular income. In order to accumulate wealth and achieve financial independence, it is essential to comprehend the many types of income. The average millionaire's income portfolio includes all 7 of the revenue streams we covered in this video. Keep in mind that no one type of income is superior to another, rather, each has a certain function and helps an individual achieve total financial success. Having a broad income portfolio with a mix of these many revenue sources is the key to accumulating wealth. Examine your present sources of income and think about ways to diversify and expand your income portfolio. You may take charge of your financial future and accomplish your financial objectives by doing this. Please subscribe to our channel for more educational videos like this one. Thanks for watching.